Billionaire says the precious metals market is manipulated. So in this recent video I did entitled Silver's Supercycle, where we shared a clip from Todd Bubba Horwitz, I also mentioned and shared this tweet from billionaire investor and gold expert Frank Giustra. So this is a pretty big tweet from Frank Giustra, who said, "I have never been a fan of conspiracies, but my 45 years experience in trading markets tells me that someone is deliberately suppressing the gold price, especially in the past 2 years. I suspect we will see a reset in the global monetary system sometime soon." That's pretty big, coming from Frank. Last week, Frank followed up that tweet by doing an interview with Kitco. So I'll put the full link in the description below to the full Kitco Frank Giustra interview, which once again I highly recommend you guys watch. But let's just cut to a short clip from that where Frank discusses this gold manipulation.
I want to focus now on the fact that you said because the West is perhaps seeing that this is the agenda, that it's keeping gold prices suppressed. Unpack that for us.
Well, listen, it's been no secret that since the U.S. abandoned gold in 1971, they've tried to suppress it to allow the U.S. dollar to maintain its supremacy, okay? And that supremacy is important in terms of your home interest rates, keeping them low. It's important to anchor inflation expectations. It's important for a whole bunch of reasons. And, you know, if you look back, you know, they were very overt about it, the West being Europe and the US, about selling gold to suppress its price during the 60s and the 70s. You had the London Gold Pool, which was very open about selling their gold. And then during the 70s, the US sold, between 1974 and 1980, the US sold 1,000 tons of gold, and they convinced the IMF to sell another 700 tons of gold. And then they got smarter. Then they realized, hey, we can't sell our physical gold. That's going to work against our interests. So they discovered derivatives, futures and swaps and leases, which are highly, highly levered and allows policymakers through their bullion dealer relationships to suppress the price of gold without losing their physical ownership of it. Just by, if you think about it, futures are levered 20-to-1, gold futures. So with a $10 million margin, you can sell $200 million worth of gold, and you can spook the market. And the way they do it is, and here's the thing, this is what I tweeted the other day. I started my life on a trading desk. I've been a trader all my life in terms of mentality, watching markets. And I've watched the gold price almost on an hourly basis since 20-something years ago. And what I've noticed is that lately, when there's a massive sell order, when there's the crushing of the gold price, it's quite vicious. And to me, it looks like it's done on purpose, and it's done to scare investors away from gold and to keep the gold price down. And they've done a very good job of it. And so they wait for days when the markets are thin, or they wait till the COMEX is about to close. And then also you get this massive selling of all these contracts, and it triggers stop losses. It does all sorts of things, scares everybody away. And then they cover it, and they don't need to sell their physical gold. And that's what I think is happening here.
All right, Frank, that's a very big statement. Who is the they in this scenario?
Well, I think that it's the Fed.
The Fed.
I think in working with the bullion banks, and I think that they don't necessarily have to communicate directly with the bullion banks. They can do it through the BIS and give the BIS instructions to sell futures, and that's then executed through the bullion banks. And then, occasionally, you see occasionally these bullion banks, they all get caught spoofing the market. They all get fined some amount of money, but they're making so much money it doesn't matter. I mean, that $1 billion fine for JP Morgan, I mean, that was the biggest, but that wasn't the first. They've been caught doing this forever, and they can do it because they can sell future contracts They can also use what's the unallocated gold holdings in brokerage accounts. And I don't know if you know the difference between allocated gold and unallocated gold, but the idea is that perhaps there's between 20 to 1 and 100 to 1 ratio between what is unallocated. And unallocated gold means that if you're an investor and you purchase your gold through a broker, you don't have a claim on that gold. What you have is a claim on the bank as an unsecured creditor. And if there were ever a run on the bank, people looking for their gold, they would simply just close your account and pay you the money cash for the closing price. They don't have to, according to what you sign when you open those accounts, they don't have to pay you, they don't have to give you your gold. So that gold is unallocated, and it's used to suppress the market.
Did you guys notice when Frank brought up allocated and unallocated metals? In a Kitco interview, I'm not going to go into any more details than that, but you guys know what's happened with John Adams and Kitco. I'm staying out of that, but I thought that was quite funny when Frank brought up the allocated and unallocated metals. So one thing I do want to share, so a lot of precious metals investors have been quite upset with the smackdown that's happened. However, what I would urge people to do is just go back to, I think it was 2008. In fact, I'll go back as well and I'll clear this up in another video. But go back to, I think it was 2008, where silver got smashed down. What was it? About 28%. And it really shook out a lot of silver investors back then. And I remember because that's when I first started getting into silver. So I remember it quite well. But what followed? There was like a 250% gain. I'll get my figures right. I'll go and do the research. But I just wanted to share this now, that there's a 250% gain after that. And so gold and silver has been getting smacked down, and smacked down pretty hard. But I did warn this in a lot of videos, that I said that it would get smacked down along with the rest of the market because of margin calls and everything else, and this just sell everything to get the cash. So we've got cash to pay our bills, to make our repayments, to meet our wages and whatnot. So that was always going to happen. The question is, do we follow, or does something rhyme and we see another 200+% return from here? I think so, but I'll leave that for another video. With regards to the manipulation of the gold market, I did this video last year, Return of the Gold Standard. I'll put a link in the description below, because if you haven't watched it, in this video we discussed the manipulation of the precious metals market, why it's happening, and who's doing it. And in this, I shared clips from multiple precious metals experts from a range of people who shared their opinions on exactly why it's happening and who it's happening from. So I'm not going to go into a big spiel now. All I'll say is go watch this video. I'll put a link in the description below, and you can click on the link above and also watch it. Anyway, guys, what do you guys think? Who do you guys think is manipulating the precious metals market, and why do you think they're manipulating the precious metals market? I really would love to see your thoughts and opinions on this one in the comments below. Also, if you like this video, please hit that like button. Really do appreciate it. If you haven't yet subscribed to the channel, do so and hit that notification bell. Take care, everyone. I'll see you all again on another episode of Finance Uncut.